This is a video driving thoughts on trading versus investing, which I think is one of the most important things to understand about markets. So what is investing and what is trading? Because a lot of people mix the two and they become, if you mix the two, it's like oil and water. They're completely unrelated, even though it's both. They're connected, but as strategies, they're unrelated. And when you mix the two, it can be a disaster. So I'll give you a few examples. So trading is basically when you buy and sell any asset. That means it could be stocks, it could be currencies, it could be futures, it could be pork bellies, it could be gold. You buy and sell with the expectation of profit, like day traders, for example. Crypto day trading has become really popular because the markets are pretty much always open and it's pretty liquid, and I'm not really a huge fan of crypto, but anyway, the trading can be any market. It doesn't matter. It could be really anything that offers electronic access. So typically people day trade futures, crypto, stocks, and FX. Those are like the main markets, majors. So that's what's trading. Trading typically requires a big deposit. You don't want to trade if you have like $1,000. You need at least like 50 or 100,000 because it's risk capital, and you need to be able to. Some of the contracts, like I was trading silver recently, they kept, as silver prices going up, increasing the margin. So you needed like 20,000 for a single contract, and there's no mini or micro in silver. So people generally recommend $50 or $100,000 for day trading. Now, for investing, investing is totally different. There's really no minimum for investing. If you're investing in a stock, for example, and you really believe in the company and what they're doing, you could buy $1,000 of the stock, and obviously, if you double your money, you're only going to have 1,000. But there's really no minimum to investing. Investing is the Warren. Some people call it the Warren Buffett approach, which is you buy and hold. So. That's what a lot of people are doing with SpaceX. They're not looking at what happens day to day. So when you're investing, you invest in a company, you buy their shares, or you could invest in an asset. You could invest in gold, take physical delivery, you just keep it for 10 years, 20 years, something like that. Investing is a long-term view, and you don't worry about the ups and downs. You just buy and hold. And the idea with investing is you're a passive investor. There's a subcategory of investing that I should probably also address. Investing is typically, when people say investing, they're really talking about passive investing. It means you're just putting your money and you expect a return on your money. The other kind of investing, or active investing, is when, for example, you're managing that investment. Like you buy a business. You open a restaurant. It costs you XYZ. You open the doors and you're the manager. You do many things. That's an active investment. You've made the investment, so you're the investor and the manager. Or another term they used to call that is owner-operated. Now, in the stock market, in the financial markets, it's pretty much all passive investors. So when people say investing, it's pretty much just passive investing into companies that the shareholders provide the capital and the executives execute their business plan. And that's pretty much it. Now, the problem, why I wanted to make this distinction in the video, is that when you look at, like, people say, oh, SpaceX is down, should I sell? Or should I buy more? And when you get into that, you get into stock picking, timing the market, and there's been some statistics that have shown investors who buy and hold versus investors who try and pick the top and the bottom. And the correlation is, the more you trade an investment, the more you lose. So statistically, the more times people tried to take their profits when the market was up and buy more, like what do they call it? Dollar cost averaging is a bunch of nonsense. When the market is down, they end up losing more in the long run. Now, of course, your broker is probably going to tell you, oh, you should, invest more. They have a different perspective typically to generate more commissions for them. But uh, if you're going to invest in something and then it goes up, don't immediately sell it, because the point is that's trading, unless that's really all you ever wanted out of it. Now, so here's another part of investing that's important to be aware of. You should have an exit target. I have an exit target on SpaceX of 100 trillion. It's huge. It's massive. I mean, it could be in 20 years, but I don't care. I mean, the point is you want to have an exit and stick with it, unless you need the money. But then again, if you need the money, you shouldn't be investing. So you should only trade and invest funds you can afford to lose. It's like your savings, your hard-earned money, your extra money that you don't need to pay your bills. So what I recommend typically is people have a savings account, which is just kind of like an emergency in case you lose your job, something like that. Like, have some money in savings for sure. Have some physical gold and silver. I mean, why not? It doesn't hurt anything. It's kind of like dead money. But no matter what happens with the exchanges, you always have it. And then you take whatever's left and you invest it. And so when you invest money that you don't need, you don't worry about when you're going to exit. You don't worry about how high it's going to go. You just try and make smart decisions. But when you do it that way, you don't have the stress. And the stress is always going to give bad results. So going back to the stock picking and market timing, it's impossible to time the market perfectly, consistently over time. And professional traders fall victim to this too. I mean, you can do it once, you can do it twice, you can do it many times, but you can't do it 500 times, okay? Because the market is too complicated. There's not enough time in the day. There's not enough data and time for a human to go through all the analysis and pick the top and the bottom of any stock. And that's why if you're investing, just invest. If you're trading, then that's your whole job, is trying to figure out the top and the bottom, but that's your full-time job. And about trading, the other recommendation they say is only trade if it's your, not necessarily full-time, but for example, you can't be an employee at a company and day trade. So you've got to be flexible and dedicate yourself full-time to trading. Like if it's 8 o'clock, if you're trading market hours, market open, from 9 a.m. till 11 a.m. or whatever times that you set, you've got to be there in front of the screen primarily. And if you can't do that, you shouldn't be trading, because you'll end up missing. I mean, you have to dedicate that amount of time to it, because trading is a discipline. It's not a skill. It's just a discipline. Anybody can learn to do it, but you have to have motivation. You have to have the discipline, and you have to have the time. And the time doesn't have to overwhelm your whole schedule, but you have to be able to prioritize trading when the market opens, when the market closes. You've got to be there. I mean, you can't be on a beach, for example. You've got to be like in the office or wherever you're trading from, not trading on your mobile phone and there's no internet type of situation. So now you can kind of understand where I'm coming from, the difference between trading and investing, and why it's important to maintain the discrepancy between both. So you want to have, if you're investing, you want to stick with it, have an exit, stick with it, and I would think about this when you're exiting an investment. If you exit the investment, what are you going to do with the money? So for example, if let's say you're saving up to buy a house, or you see another investment opportunity that you really like, in that case, selling makes sense because you're just rotating it into something else. But if you're selling it just for the sake of selling it because you think it's high, the question is why? The question is, what are you going to do with the proceeds? So the tendency, going back to the statistics, that the less you try to pick tops and bottoms, the less transactions you do, overall it's better for you. I mean, you're not going to be right every time, but we're talking about metadata, right? Statistics. The more that you churn your own account, the more you're going to risk losing, and over time, basically, it pays better to invest less, make less transactions in total. That's the goal. When you're trading, that may not be true. Trading is a whole different can of worms, which we're not going to get into. But when you're exclusively investing, you want to make as least investments as possible. Like, for example, if you're investing in SpaceX, you're going to say, okay, I'm investing, the stock went down, I'm going to buy more. And you can buy more every month, or whatever is your plan, every year, every quarter. You're going to buy a little more. That's fine. And just hold. And the other thing is, when you sell, you get taxed. So you're going to pay shorter long-term capital gains when you sell. So this is something to bear in mind. First, distinguish yourself in your strategy. Are you a trader or are you an investor? Or both? But separate these two things if you're both. They're completely unrelated. I would even suggest doing your investing at a different broker. Because when you have your trading hat on, you're going to be tempted to take profits of your investments because of just how human psychology works. And I would separate everything. And if you're investing, invest in things that you understand, that you have a high conviction of. Invest in things that you believe that are going to do well in the long run, and just stick with it. If there's some bad news and it's down on the day, don't panic. Just stick with it. If you believe in it and have conviction. I mean, you're going to be wrong sometimes, but don't second guess yourself. Develop a plan, do a little research, and then forget about it. The whole point of investing is it's not eating up all your time, because what you don't want to have happen is you spend all your time worrying about the investments you made. There's no point in being a passive investor. That's a whole business. If you're going to spend all day researching your investing, you should be a professional trader or a professional investor. Work at a mutual fund, and you get paid to think about your portfolio and make decisions. So that's what I would say. I'm doing both. So put my money where my mouth is. I'm only making videos like this because I've started doing it for myself. I was out of the game for a long time because, long story, but the Dodd-Frank, I had a Forex strategy that basically never lost. It just always won. But many strategies to be accurate. But when the genius Dodd-Frank consumer protection law was passed, it actually made rules that prevented those strategies and basically any Forex strategy from making money. So I got into private equity and venture capital and started investing in SpaceX. And now that SpaceX is IPO, we're seeing the proceeds of that, and we're seeing just a lot of positive businesses that were created in new fields like engineering, aeronautics, deep tech they call it, computers with AI. And if you strip away the AI layer, just investment in computing in general, that's been really interesting. And so you've got a lot of things going on. You've got a lot of technology that was developed by this, but you've also got a lot of people with a lot of cash to invest. So I've been trading, and it's been going pretty well. And I start to understand how people are torn between what's presented to them and what really is, because there's a marketing layer on Wall Street that, unless you're knowledgeable, it's really difficult to strip through that, to peel back the onion layer and see what's behind it. And I'm not saying that negative way. I'm saying that I'm starting to understand how people can be easily misled and confused with good intentions on many, many levels. And yeah, when the market's going up, nobody cares and everyone's kind of rich. The wealth effect when your 401k is going up. But I've gotten back into trading, and I'm going to start offering things like managed accounts and trading signals to normal people. I mean, people who wouldn't otherwise be traders, like hedge funds and stuff. I mean, I might offer it to hedge funds too. I'm not saying it's going to be exclusively retail, but I see how it can all be intimidating. Just the whole industry, and that's not cool. I mean, it's not that people can't access it. There is accessibility. You can open an account on Robinhood, but during COVID, there are all these cases of people who just lost a bunch of money trading. So I'm just thinking big and thinking out loud, but I think that there's a lot of people working on solutions that are going to create a little more balance. I think that's the best way to describe it. There's a lot of disbalance on Wall Street. That means you've got a small group of people that are super hyper focused and hyper professional, like the big hedge funds, and then you've got the masses, and then you've got this subset of like the unbanked and the debanked that don't even know what trading is, and kind of everything in between. And not only with AI, but just with technology in general, I think we're going to see a lot of balancing of that, and that's going to be a good thing, because it's going to lower spreads. It's not going to distribute wealth, but it's going to make the gap less. It's going to make the gap less, and I really believe there's going to be UBI soon, and I think it'll be a lot. I think we're sitting on some massive, like a treasure chest of resources that are going to be opened up, and there'll be UBI for people. I would definitely contribute to it. I totally support it. We've all had hardships. Most of us have had various hardships in life that society is rough. You know, it's like a jungle, and sometimes you just need something to fall back on. Maybe you don't have your parents there for you. Maybe you don't have family resources to support you, and so UBI can be good, and also not only UBI, but providing a house for everyone, for example. That's not a lofty goal. We can do that. That's easy. Everyone gets a house. No more homeless people. No more. I mean, everyone should get a house, food, shelter, the basics. That you don't have to get on the struggle bus just to get the basics. Just in survival mode. You know, you work because you want to work, and you want vacations. I mean, I don't think we should give free vacations to people or free Cybertrucks, but we should definitely give people the basics to survive. And then if you want more, you want to travel, or you want a fancy stereo, or you want some Versace pants, get a job and work for it. You know, I mean, I think that's the meritocracy that we're going towards. It's like the bifurcation of you can live in the world with the basics, or you can choose to be an entrepreneur or an employee and generate wealth, or for other reasons that you just enjoy working, but that you don't have to worry about putting food on your table and all this, because that's just a mind killer. And my heart and my wallet goes out to all those people suffering, and I support them. But so I think all these things coming together, there are going to be people interested in trading, I think, because it's fun. It's not only about money. I mean, people do it as a means to an end, but it's also like for smart people, it's like a challenge. It's like chess. It's like a complicated chess. Like, you've got all these moving pieces and so many different factors affecting things, and sometimes it's simple, sometimes it's complex. There's unpredictability. You never know what's going to happen. You've got a president like Trump that's totally unpredictable. Say what you want, but he is unpredictable. And there's no way you can hedge that. You can't hedge Trump. You can hedge inflation. You can hedge other factors. You can't hedge Trump's comments. So it's interesting times we live in. Thank you for watching. I hope you have a great day, and as we used to say in Forex, may the pips be with you.